What's going on, guys? My name is Richard Moglen and welcome to this week's stock market outlook video. Overall, we are in the fifth week of this current rally and we had inside weeks on both the S&P 500 and the Nasdaq. And what that basically means is that all the trading range was contained within the previous week. And I take this as a positive because it's nice consolidation after this quick run up. And we also had reversals on both the indexes, meaning that we started at the top of the range, reversed all the way down, but then recovered and closed right near the top of the range. And I see a lot of growth stocks prepping to break out. So my expectation is that we go higher next week. Now, obviously, just because that's my expectation, that doesn't have to happen. But going to daily chart, you can see that we are now well above the 50-day moving average. We're above the 200-day moving average, and that 30-day moving average is curling up. And all these are signs of a potential new uptrend, although I would like to see this 50-day moving average flatten out and then start increasing just like the 30-day moving average. And this is on the Nasdaq, and the SPY is much weaker currently, and you can see we're experiencing some resistance right at this 50-day moving average. And if that breaks above it, that would be a very bullish sign for me. But if it continues to offer resistance, obviously I would be a little bit more conservative with my individual trades. And taking a look at the IWM, this has always been the weakest index, and it's not even heading against this 50-day moving average, and we're well below this 200-day moving average. On the year, the IWM is down 18.9%, the SPY is down 12.2%, and the Nasdaq is actually positive on the year at 0.61%. And this is why I'm focusing most of my trades on stocks that are traded on the Nasdaq, and they are more software tech companies. So that is kind of the weekly overview. And now let's take it day by day on the Nasdaq. So this Monday, you can see that we gapped down from that last Friday, tried to make our way up, but then closed hard. And this was a negative expectation, and that carried on into Tuesday, where we had a gap down and then a really bad close. And this stopped me out of a lot of my individual names, and it brought a lot of fear back into people, although you can see we rebounded nicely from the 50-day moving average. Wednesday, however, was a positive expectation breaker because people were expecting us to continue downward, but instead we gapped up and closed in the top 50% of the trading range, a nice positive day. Then on that Thursday, you can see we gapped up slightly, tried to go higher, but then were knocked back down. And then on this Friday, we gapped up slightly, moved down a little bit, but then overall increased over the course of the day and finished right near the highs for a very positive day. So once again, this is what brings about the expectation that on Monday, we go higher. Obviously, that doesn't have to happen, and you should always be ready for whatever happens. So that is the Nasdaq and S&P 500. And taking a look at the FFTY, which basically represents how growth stocks are performing, you can see a big drop on this Tuesday where a lot of stocks were hit hard, but overall a nice week and some decent volume coming in on this Friday. However, we're still below this decreasing 50-day moving average, which I would like to see us push through next week, and we're well below the 200-day and the all-time highs. So a lot of work to do, although this 30-day moving average is moving up nicely. XLF, which is the financials, is still not participating, and you can see we're in a downtrend in this sector right here, below a 50-day decreasing moving average, below that 200-day, and below well below these all-time highs. Gold has been doing pretty well. You can see a decent week last week with a nice reversal as well. Although on Friday we did finish down on the day, you can see a nice reversal as well. Taking a look at the Dow Jones, you can see a similar picture to the SPY. And lastly, taking a look at the VIX, you can see another reason to be positive because on this Friday, it dropped 13.17%, meaning that volatility is going down. And if you're a trend follower, the VIX being down is the best possible scenario. So now let's quickly take a look at how my recent watch list performed. Overall, our best performing stock was SDGR, which shook me out on this day, unfortunately, but then finished the week really strong. And this will be on my watch list. I'll be posting tomorrow, and I'll be looking for a breakthrough of this 56.65 level. And you can see some nice volume coming in as well. However, it is getting towards the extended level, but if it breaks through on above average volume, I will take up another position. CRWD was another strong stock for my watch list. You can see that on this Friday, it had a very nice showing with almost twice the average volume. This isn't normal retail investors buying. This is institutional purchases. And overall, it's broken through this 67.39 level and looks like it will go higher, although there is the potential for a lot of resistance and overhead supply in this area and this area. So this is one to watch, but right now it's a little bit risky for me, and I don't think it will be on my watch list. Overall, the worst performing stock on my list was Work or Slack Technologies, and it's still experiencing a lot of resistance at this 29.91 level. And you can see that it never broke through this line on above average volume. It was always knocked back down. So you want to wait until it breaks through this line on above average volume before buying shares. And like CrowdStrike, it is potentially facing a lot of overhead supply because it's not at all-time highs. Overall, that is how my watch list performed, and I'll be posting my next one tomorrow. So now let's go ahead and check out the IBD Big Picture article from investors.com. And overall, they say the tech stocks lead the stock market rally as they have been doing, and Adobe and Tesla are two stocks to watch. And both of these are actually on my watch list, and I'll talk about those tomorrow. They talk about on Friday, the Nasdaq led the indexes with a 1.6% advance, the S&P rallied 1.4%, and the IBD 50 gained 1.2%. And taking a look, you can see that Thursday had a sharp downside reversal on heavy volume, and the expectation was on Friday would have been a down day, but they talk about how it rallied and finished strong. And overall, they talk about EBS, which I've also been watching, Zoom, which I sold my shares on this past Friday because of the biggest down volume since the start of the rally, and that reversal was potentially due to Facebook introducing a new video calling software. And as I said, they talk about Adobe and Tesla, which I'll talk about in tomorrow's video. And overall, we are in a confirmed uptrend. We have no distribution days, which is great. And here are the leaders up in volume and the leaders down in volume. And finally, taking a look at the GMI, we are still red, although potentially we could turn this green next week. And overall, my take is that we are in a confirmed uptrend. So that is pretty much my stock market outlook video for this week. Please go ahead and leave a like on this video if you found it useful, and make sure to tune in tomorrow when I bring up my new watch list for this upcoming trading week. Thanks so much for watching, and I'll see you guys in future videos.